Hello traders, Gary Wagner here, just about 11 o'clock in Honolulu, 4 o'clock in New York on Tuesday, 11th day of November 2014, and this is the daily report for gold and silver. How do you say consolidation? Well, it's alternating candle color. We do have an update across the board in the precious metals markets with the US dollar under pressure today. First to gold, currently trading up about $13, $14 on the day, $11.65 and change. It has had a low of $11.45.60, a high of $11.71.60. Silver also showing a modest gain on the day, currently trading up about 15 cents higher, 15.73. That's our current screen print. Low 15.39, high 15.87. More on silver in a little bit. There is absolutely no doubt the gold market in terms of pricing right now is trying to see if 1130 is going to remain some sort of active support. Of course, 1130 was this last low that we hit as this market came down off of the high roughly at 1250. So when we look at it in a microcosm, meaning a very, very small sampling of data last few days, maybe last few weeks, we can see the market coming down. We can see it finding some real resistance, at least currently at around, call it 1180. That's these series of highs here. But as soon as we go ahead and take this chart and kind of condense it, and let's go do that now so that we can see these last few tops that came into the market and how they relate. Really, what I'm seeing in this market is still got to be construed as fairly bearish. Let's take a look at these recent highs. We've got a high here. Market comes down and then makes this low here. So the next high that we have, of course, is a lower high. When we compare it to this high to this high, market comes down and it absolutely makes a lower low. In other words, when we compare this low here to this low here, this high here to this high here, we've had a series of lower highs, series of lower lows. Market comes up, makes another high right in here. However, when we take a serious look at it, once again, we've got, again, a lower high when compared to the prior high. And then we go and we take a look at this low here. And, of course, we, again, have this lower low. So when we compare most recent activity in the marketplace, we've had these series of highs that have been moving down, series of lows that have been moving down. And so even with this market attempting to find some sort of support, let's say, in the market, right now it's not evident either way in terms of a bigger picture. No doubt we've had these series of lower highs, we've had a series of lower lows, markets moving down. At what point will the market find support? Is that area 1131? Well, right now, as we have been talking about, this market's really effectively been trading off of two things, the equities markets as well as the dollar. So first, we'll take a look at the dollar. There's no doubt we have found some sort of resistance in the market right at, call it 88.40, 88.35, but these series of tops that you can see right in here. You had this dark cloud cover. You did not get confirmation. Following day, you had an up day. However, that up day contained a lower high and a lower low right in here. Today is more of an inside trading day. Now, you do have a higher high than the previous day. Doesn't take out this high right here, of course. And you do not get a lower low. So it's trading on the inside. And so the question is, are we going to see some sort of real consolidation and see this market have some sort of weakness? So, for example, here we saw it come down and retrace a given percentage. Are we going to see that same kind of activity, or will the market trade sideways? That's what we'll have to see in the upcoming days. The interesting thing about gold is that we're now getting this alternating candle color, but when we stand back and look at the weeklies, we get a different picture. And this is a weekly chart cash market. And the picture that I am referring to, let's go ahead and try to blow this up just a little bit. But the picture that I am referring to is as this market came down, we have this candle right in here. This is last week's candle. Color is not as important as really the body size. It's very, very much like a hammer. You've got a hammer, inverted hammer, shooting star, and hangman. Those are the four paper umbrellas, they're called, or umbrella group of candles. Now, to take this particular call, this hammer as a bullish hammer, you've got to have the following week that has to be a green candle. We don't have that yet. And that green candle has got to have a higher high and a higher low than the prior hammer. We're not getting that either. In other words, this red candle right here, and again, we're just at the beginning of the week, so we'll have to see how it forms, but without getting a candle that looks something like this, that hammer really doesn't have the same kind of significance that you would get in other occasions. You've got to get, anytime you're looking at candlesticks as patterns, you've got to look at the confirming candle, because the confirming candle is of absolute importance. Now, that's one thing that we want to look at. The other thing we want to look at is as follows. When we take a look, this is a 2-day chart, but I have compressed it enough so it's almost has the same amount of data points as some of the weeklies that we look at. But another model could be made for the fact that as this market came down, when we look at our retracement, there's a 61% retracement at 1141. The market definitely took that out and hit that as a low. There could be a model or a case that would look at this as a potential bottom in the market from this long correction here, looking at these series of waves as 1, 2, 3, 4, and a truncated fifth. That's the only way you could really play this model out. And the only reason this model might have some merit, is the fact that it comes in at the 61% retracement. Now, my sense is that we are still very, very much in this fifth wave. And my belief is that it is probably more likely that we'll see this fifth wave carry down, where wave 5 and wave 1 are about equal in terms of the distance that they moved. That being said, that being the case, if that's how this model unfolds, we are looking for gold to test. It's tested 1130, 1131, but as low as 1100. That is still quite possible. So we'll have to see really how this unfolds. Of course, we're short at 67.50. Market is currently a couple of dollars in our favor, whereas yesterday it was $15 in our favor. There's no doubt there is a real difference in there. Let's see how this wants to unfold. And of course, silver, we can see silver is clipped up. We see that there's absolutely no doubt silver did find, on a tentative basis, some support here at 15. The real question is whether or not that will hold. And I personally think that if we see gold hold and move up, probably see silver do the same. Reciprocally, if we see gold come back under pressure, we will probably see silver once again come under pressure. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.